Good morning, everyone, and welcome to the European crossover webinar. And we're seeing uh, indices continue to go and remain higher, but you can see it's still relatively quiet overall here in the euro, and really in some of the other pairs. You can see here with the cable, we did go on and post a gravestone doji a couple of days ago, but you can see here we're not like a whole lot lower, but we can go into the indices quickly and I was really surprised to see these markets come back because they had looked like they were in place for a pretty good sell-off yesterday, only to come back quite strongly. Really surprised, to be quite honest with you, and also frustrated here to see them just turn around and just jump right back again. Um, and let's go and take a look here at the gold market. Certainly taking a little bit of further dip here in the gold market. We're seeing another dip back in here. We saw it. Let's go and pull this back. You can see here in the Asian session, they took a pretty good dip, popped back, sustained a pretty good move lower here, came back again, and we're starting to take another dip here. I'm surprised, like I said, and I was quite disappointed to see them come right back all over again. I was did not expect to see that happen, for us to come back so quickly. Not only had we gone and come back, we had come back when we sold off. We sold off in pretty good volume and took a pretty good step back here, only to come back, challenge, and then really just seemed like as if it was just some short covering, although taking some dips back, but really surprised to see them come back to this extent. When I look at the cash equities, you can see here we're still way up here in the stars, way up here. Uh, One of the things that also I saw in the morning at the time was that even when I like to call them now the big eight, were trying to establish themselves or come off those lows, initially the NQs weren't even paying attention because there was so much selling coming in place. But eventually, like I said, they did go on and come back. Google, you can see this big old huge jump. Look at NVIDIA. I mean, some of these moves, I mean, to me, is just beyond crazy. We did see Apple finish somewhat lower on the day from where they had opened up. But really, many of the others held up relatively well. They came back. One could argue, even though Netflix did come back up, and you see like a bit of a hanging man. But look at NVIDIA. It just kicks on now. We did work a little bit lower from where we had opened, but still nonetheless strong, and certainly with Google. We'll have to see what plays out. One of the things that I did see, bear with me, was here in the VIX. The VIX closing at levels, I believe someone was stating not seen since March here, so we jumped up quite a bit here in the VIX. Bear with me. Here, I'm not even sure that that's even right because let's see here, day, but levels we hadn't seen in some time. Um, so the once again, still moving a little bit higher here. That opens the door potentially for what we could see some bigger moves, and we already saw that as we came back off of these lows. We'll have to see how today's action goes and plays out, but it's just been some kind of, at least to me, some kind of a strangeness here. Going back here on the indices, or at least that chart. I want to go and take a look here on crude oil market. The crude oil continues to sell off after being strongly, and not only did it sell off, it remains near its lows. But of course, indices doing something completely different. Initially, crude was kind of going along with the indices, and you can see certainly a divergence there. Gold came off quite a bit, obviously with the indices going higher, but once again, the dollar had firmed itself a bit here. With that, we're going to go on and take a look at economic data coming up. We did have German market services came in a little bit better than expected, and the Eurozone final market services just a tad bit better than expected. Also, final PMI services at the bottom of the hour with UK data, looking for 60. And at the top of the hour, we'll have Eurozone retail sales. As we move into the States, we'll have challenger layoffs, initial jobless claims, and productivity, as well as 8:30 Eastern, we'll have Canadian trade balance, exports and imports, and market composite finals and market services final, and ISM non-manufacturing for August. With that, we'll go in and get into the news. Analysts upgrade the Australian New Zealand dollar's outlook, but doubt rally would last. Analysts again upgraded forecast for the Australian New Zealand dollars in the latest Reuters poll, but they still lag the market as investors' risk appetite gets a boost from hefty central bank stimulus. Median forecast put the Aussie at 72 cents. The market, however, already has Aussie at 73.20. Yet the poll shows analysts doubt the rally can get much further, putting the currency at 73 in 6 months, 74 in 1 year. The gains in Aussie have come as the Australian's $2 trillion economy has sunk into its first recession in almost 3 decades, with unemployment at a 22-year high. The Reserve Bank of Australia stepped in by slashing the cash rate to a record low quarter basis point with unlimited bond buying program and offering cheap funding to lenders. It has promised to do more if needed. But the Federal Reserve has gone even more dovish, making the greenback weaker and eroding its previous interest rate advantage over rivals. Also supporting the Aussie is the relative outperformance of the Chinese economy, which continues to suck up Australian resources. That has gifted Australia with the largest current account surplus. The RBA has explicitly highlighted the role of fiscal and Australians' favorable borrowing conditions to support the economy in a great scale and scope up ahead. The New Zealand dollar has benefited from similar forces, though again, analysts' polls seem to think it has topped out its movement. And the euro hits week low as dollar finds footing. The dollar's bounce extended on Thursday as investors trimmed bets against the greenback and sold off the euro on concerns that the European Central Bank was worried about its rise. The bounce has lifted the greenback about 1.3%, about 28-month low it hit against a basket of currencies on Tuesday. Few analysts expect it to hold for long, but it gained broadly in Asia and sustained would be the first time for the dollar in a climb in 3 sessions since May. You could put the dollar bounce to a bit of a trend reversal, but it has a long run downward, said our BNZ senior analyst Jason Wong. But if it is in its floor, it's only a short-term one. Everyone pretty bearish dollars for good reason, he said, pointing to the Federal Reserve's policy outlook that will likely keep rates low for a very, very long time. For about a fortnight, the dollar has been fighting to hold the line after dropping 10% from the March peak as traders started to temper the stretch on the bets on the euro. And the euro fell to about 17.97 in Asia after Financial Times reported that several months members of the ECB's governing council were concerned about the euro's rise could weigh on European growth. That followed remarks on Tuesday by ECB economist Philip Lane, who exchange does matter for monetary policy, which had begun the euro's descent from above 120. For now, we do not rule further extension towards 118 if we're cautious confident for the downside from that level, said OCB analyst after it hit a 3-month trough of 88.67 on the euro pound. The yen slipped marginally to 106.33 per dollar, and the Australian dollar slipped to 73.07, and the Kiwi was down to 67.59. Ahead of Thursday are purchasing managers' indexes in Britain, Europe, and the United States as markets are waiting U.S. jobs data on Friday. And with that, we'll move on to the analysis. I did keep my short in the NQ. I said I would get out if we got above 12,372, which is actually where we're at right now. But I thought because of the volatility so whippy, and with what we saw yesterday and with the VIX moving higher, so we'll see what happens. But really frustrating to say the least. Let me go. Euro. So the euro paired back on Tuesday with the, I don't know why this thing doesn't update. I don't know. It's frustrating as hell. But it was, I had indicated that on Wednesday we paired back further and that the support, remember I was tagging it for right here, was going to be, let me see, I put it actually down to right there. That was it right here, 1758. Why that thing didn't update, I don't know why. So it's supposed to be 1758. And the upside, we'll go to 2-hour chart. Right there, 1885 for the upside. So the cable dipped to sub 33 before recovering to 33.52. Support on Thursday will be 32.37 with resistance at 34.08. And on to the Aussie. So the Aussie dropped back on Wednesday, only to bounce back. Resistance will be 73.75 with support at 72.62. And on to the Kiwi. So the Kiwi closed higher on Wednesday after tagging resistance at 67.87. Resistance will remain the same with support at 67.03. And we've got here at 67.88. The high yesterday was 67.87. On to the dollar CAD. And the dollar CAD bias chart resistance support will remain the same respectively. So we didn't really move at all. So those are going to still remain the same. We'll get to that with 30.25 and 30.75. And we're just kind of stuck in the middle. We did press up a little bit higher here up to 30.96, but we can move that. That high from a couple of days ago was 30.82. We'll just move this up just a bit higher. And the dollar peso languished near slows, and support remains at 21.68 with resistance at 29.98. We can probably lower that now to 29.92, but you can see here we're just in a relatively subdued range right here, barely even moving. So 21.68, which I think we may have still had. Only difference is, and we've gone actually lowered this down to 21.92, so we'll keep that in case we do see a bit of a rebound, but that should keep it in check. Onto the dollar yen. So the dollar yen pushed higher on Wednesday. Resistance on Thursday will be 6.58 with support at 5.71. Still, I mean, pushing a little bit higher, but and just a tad bit higher also even now, but still relatively quiet. And onto the cash dollar index. The dollar index added on to its gains on Wednesday. Resistance remains 93 with support at 92.19. But still, I mean, we're not seeing a lot of volatility. We have added on, but we're not seeing huge moves despite how oversold the dollar index is or how overbought the euro is. With that, we're going to move into the cross rates. Our resistance still remains here at 71.82, although we did punch up as high as 71.92, so we'll keep the 71.82, but we're still in a rather tight range here, barely even moving. And if we are to go on pair back, it's going to be down here at 71.42. And on to the euro yen. We have continued to go and weaken here after that strong move. Looking here on the 2-hour chart. As we've gone and pushed lower, and a pretty good strong move we've had down here. Good support here. We go right there, cross, maybe an extreme move down here to 25.09. And currently the resistance right there coming across, 26.04. 60.65. We're just holding just above that. Remember, we've had that as our support, and we're not even barely even moving. So no changes here for the euro odd, which we've got 60.65 and 62.09 on the upside. So keeping it in a very, very tight range, and move on to the euro kiwi. Low far is 74.67, but this is where the real support comes in, right there at 74.47. But it does look like I'm trying to put in a little bit of a bottom in here. And we'll go with this high, which I think may confluence with the low. It does. So we'll go 74.75. Look like we're trying to make a stand there. And on the upside, 75.85. And it's been a pretty good little sell-off. And on to the LCN. A little bit further pair back here on the LCN, we had our bias chart support, which would be this 77.10. And we're heading down there. You can see this key level here. Go. And the upside is going to be this bar right there. $77.94. And we'll go move on into the guppy. We had 40.92, and we're going to go and keep that 40.92. And on the upside, we had 42.05. That we will pair in a bit here, and that will be right there at that level, which is 41.68. And lastly, with the sterling odd. Coming off of those lows, but support would be 81.52. And resistance is going to come right there, 82.41. There we go. As I said, cable continues to remain in a very, very tight range here. We do have data in just a few moments. We'll go and pull that up here. And market services PMI. That would be coming. It just came out. Still no number I'm seeing here. A little bit of a dip further here. And came out 58.8, so a little bit weaker. A little bit of a dip in the guppy. And sterling nod. And cable still relatively quiet. As noted here, indices, I mean, a tad bit weaker, but still, I mean, really quite the snapback, from yesterday. I mean, it looked like when we came down here, we came on pretty good volume, and the volume kept building up. We did get this long-legged doji. You can see that. So generally, long-legged doji. You finish in the middle. Bears don't have control. Bulls don't have control. What's the prevailing trend? It is a 2-hour chart. Well, the prevailing trend most recently right here, the snapback. So you would expect a pullback, but didn't expect the market to come back and then get above this 378. We're teetering there right now. We've kind of been up and down. We really need to go in and break lower. The 5-day average still remains up here at 12,150. We'd really have to break below that to really ensue some selling that would be longer lasting. So that would be the area that we'd be looking for. But other than that, that's about it. Gold, as I said, right here at 1940, and crude oil seems to still be on the weak side here, regardless of what equities are doing. With that, I'll go and get the bias chart posted in the chat room, and thanks for joining us here on the European Crossover webinar.